Your money should work as hard as you do. Join us on Classic FM for a refreshing conversation on building, managing, and preserving wealth the smart way. From practical financial insights
the mics are
to
live.
expert perspectives that help you plan for today and secure tomorrow. This is a show that puts your financial future
That
first.
is right. Welcome once more to another edition of Wealth Management and You here on Classic FM 97.3. My name is Chico, and in the studio with me, as usual, Raphael Emenyon. Hi, Raphael.
Good. How you doing, Chico?
Okay. Still riding the crest of that wave?
Yeah.
Enjoy it. Our topic today is trading and investment, and our guest on the show today is Olumide Odedimo, who is the founder and CEO of OHC Trade Room. Olumide, welcome to the show.
Thank you for having me, guys. I like your energy here. First, I'd like to take a minute to big you up.
Wow.
The music here is fantastic. I really, as I walked in here, the first thing I said is I haven't heard music like this in a long time.
Oh, bless.
So you're going to be on my radio
Thank you
every
very
day from
much.
now on.
Thanks so
God bless
very
you.
much. Thank you. Okay, so trading and investment. Remember, it's
Correct.
wealth management and you. And clearly, trading and investment is a very important and integral part of anyone who wants to build their wealth.
Absolutely.
You know, you've got to trade, and you certainly must be investing.
Yeah.
Yeah. So, but let's start with OHC and know sort of figure out what that's all about. Since we've got
The founder here.
Yes.
Okay, so OHC has evolved off my many years of being in the financial markets, and along the way I found myself really gravitating to training people and teaching people across all the different investments I've done, from equity investments to bonds to some other type of structured type of investments. And what I've found is if you can't explain it to your 7-year-old, then you've said too much. There's a way to talk about investments and trading that at the basic core anyone can get. So that's my journey, to simplify and demystify how we should be thinking about investments and trading. So that's the basic intro into it. So OHC is founded basically to create a platform for people to educate themselves, create a community where people can mentor each other and carry each other along, but also you can get experience. So that's the basics of what you need: the knowledge, an avenue to get experience and mentorship to help fast track your route to financial freedom.
I can bet Chico likes this one.
I love it. I really do. No, because I'm always talking about it, especially on this show, where I say, you get these financial gurus and technocrats, and they're in here, and they use all these terms. They'll say something, and I'll be like, what on earth is that? I mean, come on now. And I say, the first tier this, and the wanting, it's got all these terms that get used, that as far as I'm concerned, saying, it's kind of like they're just buzzwords. I know they mean something, but the meaning is lost on me.
Yeah, and in a funny way, those are the barriers to the room. So in some industries, they use so many buzzwords. They're very simple words, but if you don't know what they mean, you can't have conversations.
Absolutely.
You can't. You wouldn't be able to engage, and at some point you say, I'm checking out. In reality, it's like when I went to school and I started, like, if you don't know a language, it's hard for you at the beginning, but once you get it, so that's my aim now, to help people get it, the simplicity of it. So let's go ahead. You guys ask me any questions you want, then we'll take it from there.
Certainly will. All right, go on.
Okay, so let's go into today's topic, trading and investment. Are they the same? Do they mean any difference or what?
Okay, so they effectively have a lot of similarities. You're putting money in with the expectation that it grows in value to some degree. However, the way you approach it is different. Investing is really about long term. A lot of investments, when we say investing, we're thinking about years to decades. And the backdrop of investing is you want to be able to analyze things and have as little stress as possible, because you've done your homework and you said, I believe this company in 10 years will look good because of A, B, C. Maybe you've looked at the factors of how many people are selling fish on the streets. You think that market is going to boom. There are certain factors you say that are going to drive this investment from now in the future.
Yeah.
Could be, for instance, where in Nigeria there's mining industries popping up. There are many different industries popping up because we're catering to many things that are happening on the global stage. So we believe this company is going to grow because the price of oil or this commodity is going up. Now, when you're investing, we're talking 10 years. You're doing your homework, fundamental analysis, you're looking at all these factors, say, I've done my homework, I'm ready to park my money, and I'm a patient investor.
Yeah.
On the trading side, what we're thinking about is how can we create value very quickly. So we're still doing some level of analysis, but timing is important here. So the moment you get into the market and the moment you get out, and trading can last seconds, minutes, hours, sometimes days and months. But we've had trades, we've seen trades before where I've done a trade and within maybe like 10 seconds I'm out because I timed it perfectly, made my money or lost my money, and took the loss or took the profit and moved on. So that's the main difference in terms of structuring. Now, the other difference is the emotional toll that will have on you. So whether you're trading or investing, you have two pieces of capital: your financial capital and your mental capital.
Okay.
Your mental capital gets eroded the more stressed you are. So have you ever done any type of investment and maybe it hasn't gone the way you want and it's taking time, but you have a little bit of, maybe it's long term and your friend has shown you, cash flow, the business is going, and you can see things moving progressively. Stress is quite not as much. And maybe you've seen some people, I'll use an example, gamblers that have gone to the casino table and they've bets, first bet went well, second bet went well, then it started getting bad and they started doubling down and doubling down. The stress level they're feeling is because of the aversion of loss.
Yeah.
Now this is where biology comes into it. When your body and your system gets stressed to a certain level, your flight or fright response kicks in. And you've seen some people that when they're either ready to fight you or run away. That biological wiring is why trading is so difficult, because it kicks in when you fear loss. When that loss kicks in, what happens is your cortisol level increases, your adrenaline increases, and if that emotion is so strong, it takes over your system. And then something called the amygdala kicks in. Your brain cannot get connected. So coming back to the issue of trading, the stress comes and you see people that cannot control themselves because the hormonal system has been hijacked. So their decision making is poor.
Wow.
So when people, and this is why a lot more people, this is why I say, I want to be a long-term investor, let me park my money and leave it. A lot more people fail at trading than you think. It's significantly more. And it's not because they don't know how to invest or how to trade or the rules. It's really that portion of psychology and emotional control. So that's the simple drop.
So are there things that people need to know, to be able to, for them to be successful at trading?
Yeah.
Would you like to share?
Or that might, or that, a different opinion, or that might mitigate
Yes.
this.
Definitely.
This
Yes,
type of.
definitely. Okay, so
Okay.
I'm going to start off with one of the basic things we all need to do in this world, which is treat each other with love and kindness, because the energy you carry around impacts you. Have you ever left your house happy? You get on the road, traffic, and then you're agitated for the rest of the day.
Yeah.
All right, that energy carries along. And the more that negative energy builds up, it affects your decision and everything you do. All right, so one aspect of life and things, meditation, calming yourself down, taking time to rebalance. Look, we all are in this world for the first time. Some of us, we unintentionally wrong the other person, and then you carry that energy, you give it to the next person and those things. So learning how to be mindful, have emotional control, emotional regulation is one important thing you need in investing, trading, anything in life. Look, bringing up your children, looking after your staff, everything. Now, coming back, to be able to be a good investor, what are the things you need? And a good trader, I'll start with the similarities.
Yeah.
You need a framework of how you assess things. You know, some people say, I look on the street, there are many people entering that restaurant. It's raining, let me send umbrella. So there's a way to analyze whatever market you're doing, there's a way to analyze each one, and we'll call that fundamental research. Is there something that is governing this asset class or this investment that makes me feel, okay, there is value here? So after that, you now need a few things. You need a system that has high probability of making you money. So in trading, we'll call it day trading. You need to be able to have something you can, back test or do analysis on and say, this has a more than 60% or 80% chance of repeatable edge. So we call it edge in the market, which is I have something that has shown that if I do this long enough over a long time frame, without allocating too much risk on any one of them, I'll make significant money or good enough money to survive.
Yes.
In investing is something similar. I've researched the company. I believe the company is going to be valuable, whether it's Nvidia, technology company, or gold miner. You've done all that homework, and you have a system of how you approach it and how you enter. So once you have a system, you need risk management. So risk management can be, well, I will only allocate 1% of my capital or risk to this investment, because it can always be wrong. So if you're now making an investment choice or a bet or a trade, and you put 80%, be ready to be wrong, and then
lose 80%.
And lose 80%. So there is the system, risk management, and the first bit I talked about, which is the most important bit in my opinion, because all of us can learn stuff. We can really all learn stuff. It takes time and energy, but you can learn a lot of things. You can then be structured to have a risk management approach to say, I see the risk, well, let me to control myself. The one that I guess we're born with and is biological is that psychology, the trading psychology, which comes back to the emotional control and learning how to regulate yourself. The truth is, if you don't have it, life will teach it to you. And that's what happens. And like, if you don't have it, life will teach it to you. It's my journey, it's everyone's journey. Some people learn it through, there's some guys that have good fathers in this world and they pick up that energy. There's some guys that are gra. I have explosive energy, I played sports. I played semi-professional rugby at one point. I wanted to be a sports person. So I have that explosive energy. I've learned through time, Biko, relax. Calm down, my friend.
Interesting.
So that's kind of it, So you need a system that has repeatable edge. You need risk management approach. And lastly, you need trading psychology, which is emotional control, how to regulate yourself, how to really step away when things are going crazy and recognizing that quick before the amygdala kicks in, and then you get trapped in a loop of fighting something you should step back from.
Let me just ask before you carry on. Here we are, we're talking about it and giving it this really sort of intellectual, from a very intellectual sort of point of view, and explaining it, even as comprehensively explained, anybody would get it. But I'm just wondering, and I've mentioned these people before. If you go to Alaba International Market, you go to Ladipo, Owode, and all these sorts of places in Temeta. You've got hundreds of these young men who, what they're trading in terms of what they do, right? And their portfolio. We're talking of people who are worth over 500 million, whatever it is. This is what they're turning over, and there's loads of them, right? And I just wonder, right, if it's just pure something primal in them or whatever, because these people, a lot of them would have started out as an apprentice for 5 years, so and so. Then the guy set them up and they started a business that was about 10 million, 15, whatever it was, and then they built it from there. And today worth 500 million now, and there are hundreds of these people, literally hundreds of such people, who I doubt have ever sat down to hear this broken down in this way that you're saying. However, they are still successful. What's going on there?
So we're talking about.
Do you get what I mean?
Yes. So we're talking about I guess, two different type of trading, but that trading is trading altogether.
Okay.
They have a marketplace they go to, and
Yeah.
they're selling products, and they're looking for, it's supply demand.
Yeah.
Now, those markets work because you have a physical presence, and there's more there's more demand than supply. Ultimately, that's why all of these things would work. So where you have, like all these FX traders, how many of us are demanding? Like there's a lot more demand. They don't have to shift too much their prices. Say this is what the rate is, take it or leave it. Someone else will come and take it. So in whatever market or system you're talking about, those are the driving factors, and then you have the ones that are now strong and can compete. That's why they can be aggressive, because really, if you're not aggressive and there's a lot of demand,
Yeah.
someone more aggressive with you
It's gonna always
will
call
take
up
it.
the deal.
So you may be like at 2 naira, okay, 1 naira 85 back, and that difference of 15 kobo or whatever is shaved off is his aggressiveness, and then he does it 10 times over, 100 times over. So they can do it in volume, and I feel those kind of markets you're talking about have a lot more demand. Now, when we're coming to the financial markets, this is like big scale. So what kind of trading am I talking about? There's some people that trade FX, Nigeria FX, and there's some people that trade FX on an online exchange globally. Say, for instance, maybe the currency exchange. They're trading sterling versus dollar, or dollar versus yen, because price goes up, price goes down. Again, same concept, which is more demand, it goes up, less demand comes down, more supply pushes it down. So that's the overall concept behind any market. The more there's a demand, the more price goes up.
It's gonna go up.
All right. Now, the difference between them and what's happening in this market is, first of all, the probability of knowing who the players are. You can't see them. They're big guys shifting and moving these big markets, and they're moved by big people. Again, for instance, the decision making of a Deutsche Bank or a Goldman Sachs or a Warren Buffett or any of the big guys or any of the big guys here as well, they don't make a decision every day like you think. They go into boardrooms, they sit and they say, well, let's get rid of this position, let's sell 500 billion or however much. That doesn't go in one day. So their order sits in the market for days, weeks, months. And as that's happening, the brokers in those markets are moving the market to where liquidity is to fill those big execution orders. So us small players that now come in thinking, oh, we're just following the wave. We're trying to just join and follow the ride. That's really what it is about. Trying to find where those liquidity trades are going and join them.
Just to get on it.
We don't control anything. We can't. I'll give you. It doesn't move. So trying to negotiate with big markets. No, then you now say, actually, I've now put myself in a market where I actually don't have as much control as I had. So when you're a business owner, you can push. You have hard times. You push harder. You're going through something. You even push harder, and then you break through because you've had sleepless nights. You've gone to the gym. You've struggled. You've hustled. Then one contract you were looking for, you sat at the guy's door for 1 week, 10 days, however long. You finally got your breakthrough. You made it. That's success. That's successful work in trading. You want to be pushing against the big guys, their flows move. You can't be fighting that trend and that wave. All right, so that's trading. So trading is short term, looking to make quick money. Again, I'll explain when I talk about what the course or the structure I have for my courses and the buckets I've created, and how to simplify it for people. But trading is really about creating wealth. Quick money, but a lot of people get burnt. It's not for everybody. In fact, most people, if you don't know this, learn it, do it very slowly, because once you start building bad habits, it becomes hard to unwind. And if you don't know all the things, the system, the risk management and the emotional control, then it becomes hard to unwind and relearn better skills. So, and let me pause for that and give you time to digest everything I've said.
But this sounds similar to gambling, doesn't it?
All right. I want to be careful. Okay, let me use an example. Do you believe someone that is a pilot is a gambler? Or flying a plane, is that gambling?
I
Okay,
suppose
it's not
you could-
risky.
no, I suppose you could look at it from that perspective.
But if you now put a bus driver to fly a plane, crazy risk, yeah. If you put a footballer to be the prime minister. So my point I'm trying to make here is in any system. So for instance,
round pegs and round holes.
yeah, exactly. So look, in any system, there are people that are experts in the systems, and then it's the expertise that makes it not gambling. In terms of there's some people that have a structure in the system, and then more importantly, they control themselves. So for people playing poker, I know, oh, I've got a royal flush or I've got a certain hand. They know the probability of what that means. So they're playing their hands and they're doing it strategically and calculated.
And they can keep a deadpan face.
Yeah,
So
and
not
they can.
yeah.
So many things that go into playing poker.
Yeah.
Now, is he a gambler or is he a strategic player? Well, he's playing a game that is gambling, but he's not a gambler. He's really strategic. Me, that I'm investing in the market. Okay, the plane flew over my head today. I will buy. Which airline will I buy today? That's gambling. Like, there's no basis of structure around what you've done. Or the Holy Spirit spoke to me today to buy. Sorry, like, to be honest, I want to be careful because sometimes I've done things and I've been moved by spirits, but I've gone to research. It's okay. This looks like a good deal. Let me go and spend some more time. So some things can lead people to have an idea, and then it depends on the work you do. So yes, it can be gambling or it can be strategic. It's really down to the person and how they structure, how they enter trades or
You have to
investments.
be an expert.
You don't have to be an expert, but you have to approach it
You have to
from a
understand.
learned, to
what
learn
you're doing.
enough. Yeah,
Okay.
yeah.
Are there specific environmental factors
Oh, gosh.
that one needs to put into consideration?
100%, 100%. So again,
So
we're
what
talking about.
shadows?
So if you're investing. Okay, I'll use an example of what I mean by investing. I want to create a portfolio that gives me less stress but earns me interest every day. So I buy bonds, I buy government T-bills, I buy things that I know will be earning me interest every day.
Yep.
I can now park it and go to bed.
Yep.
I've now done my homework, I've invested, and I understood that that's long term, but it'll be paying me gradually.
Yep.
No stress there.
Uh-huh.
I maybe understand the environment enough. Or I invest in equities and I say, the equity market can go up and down, but I want a dividend paying stock. So the same way, you can own your own company and the cash flows of your company, let me pay myself something every month.
Yeah.
You know you're receiving something every month.
Uh-huh.
So whatever is happening, you go through the up and down, but you're receiving something every
Yeah.
quarter, every month.
Yeah.
So investing can reduce some of those environmental factors because you're receiving something,
Uh-huh.
whether it's interest or dividend. Those things reduce the impact of the environmental factors of the prices of these instruments that can go up and down depending on who wants to blow wind today or tomorrow. Iran, Trump, our government, anything can make things price move. It can make prices move. On the other hand, you have this trading thing I'm talking about. So I would akin trading to surgery, which is you're operating on someone, and what kind of environment do you want for really clear 100% thinking, no disturbance. You really want a clear mind because this is really surgery. This is financial surgery.
Uh-huh.
You're operating in a high risk environment. The environment has to be sterile, clean, clear, nothing disturbing your mind. Like people that have surgeries, or women that give birth, do you want your surgeon to be blasting music, distract you? So we now come back to the environmental factors of trading. The resource you have for trading is your mind. So let's talk about what are the things that affect your mind. All right, so we go back to the thing I started. When you leave your house, first thing, pray to God, hug your children, hug your wife, be nice to everybody. Leave that environment with peace. As you're driving, hire a driver, don't drive. The stress on the road may give you too much hypertension. By the time you get to the office, there's an energy in you now, if all that happens, what you should do then is take 15 minutes to meditate. When I say meditate, really, it's about breathing and again, I'm going back to biology. My degree, by the way, is biochemistry. My first degree is biochemistry, so I'm a scientist at heart.
Yes.
And you have your sympathetic nervous system and your parasympathetic nervous system. When you're stressed, you tighten up and then your sympathetic system has taken over. But to relax the body, you breathe, you slow it down. You know, mothers are good at teaching children this. They really teach them how to breathe. Oh, they're having a tantrum, then calm them down. So literally it's about calming your nervous system and your mind down so you can unplug that hormonal thing and reconnect your brain so you can now make better decisions. And this applies to everything in life. So I'm talking life now, not even trading.
Are there macro factors as well that needs to be considered?
Yeah. So the way I've always looked at investments would be I would start from macro level, so country. What do I know about country? Is it safe? What are the rules? Can companies operate here? Is there anything undue? I don't want to see any bad countries now, but there's some countries that start with B that I won't invest in again in my life. I'll let you go and figure out which one it is. Then you go down to industry level.
Okay.
So how do the industries here operate? Again, there's some countries that have industries that begin with O that I won't go and operating again. I'll just be giving you coded words. I'm not even going to talk about the last level. The last level is corporates. Yeah, the company or the instrument you're looking at. I'm not going to mention any codes here, but you have to go through those levels. Okay, so if the macro level is fine and the industry level is fine, then the investment may be good. But if those things are not fine, at any point in time, they can pull legislation, they can pull the rug, and then your investments goes to is not what you think. So in all of these levels, what I've explained today is trading and investing. Yeah. And the way I keen it to is, and what OHC is about trying to say, how can I take this knowledge I have and create 3 investment buckets for people? And the way to think about it is, if I have all the money in the world, why do I want to stress myself? Can I have a bucket where I put my money in and create passive income and be chilled? And that's the bucket 3, let's say. We call it our fixed income bucket, where you're earning interest and accrual. Bucket 1 on the other extreme is, I have 0 money. I have no money. Now in life, when you start off from 0, you pick up experiences through life, but at some point you have to take a risk in your life to now make money. So the trading bit is the risk I'm talking about. But sometimes if you don't understand the risk, you burn time, burn money, burn a whole bunch of things. So the best way to get experience is you're either going to learn it through someone or trial and error. And that trial and error can be rough in life. So mentorship, going to the right people, going to the right school to learn this skill sets. We have many good business schools here, LBS. Go and learn the right skill sets. All right, so once you have some learning and hopefully some mentorship, you can learn this, how to make money. Good. Then once you make money, how do you grow it? That's our bucket 2, our equity bucket, that you grow your investments. Look for investments that then can appreciate in time, and in your learning journey, you figure that out. Then by the time you're tired, you say, let me pack it in bucket 3 to relax, save, interest will now feed me for the rest of my life. So that's the journey to financial freedom. Make money, grow money, protect money.
Fantastic. There you have it. One thing he missed is that it can help you if you listen to Wealth Management on You every Monday at 5:30, because you just got some serious tips and a serious lesson breaking down trading and investment. Tell you what you need to do and what's happening to you some of the time. This show comes your way at 5:30, as I said, every Monday. Final words, John.
If you miss any of our shows, we'll advise that you watch it on YouTube, our YouTube channel, Wealth Management and You. The videos are there, so you can catch up with any of the episodes that you probably had missed. Thanks once again for joining Lagos. See you next week. Discussing trading and investment on today's show has been Olumide Odejiro, founder and CEO of OHC Trade Room. Thank you so much for coming through, Olumide.
Thank you very much. I'm going to be listening to some heavy jams tonight.
That's right. Olumide actually did pick a song when he left it up to me. And this is what I picked.